Guys, and welcome back. On one of our last videos, we talked about support and resistances. So these are these key levels right here, where historically they have been areas where price tends to bounce off of, or where price tends to reject off of. And to be a little bit more accurate with these, we talked about how these supports and resistances are actually based off of the current price right now. So because the current price right now is 376 and this 389 level is above, technically this is a resistance, a level where a price might reject off of. And because this is a resistance, what I can do is I can probably just color code this as red, meaning the price should probably go down from that point on. And this is also a resistance up here too, this 411 area, so I might as well color that red, just so we can have a little bit more clarity when we chart everything and sorry, excuse me, when we chart everything and we see that the price is heading towards one of these supports or resistances. Okay, cool. So now that we have supports and resistances, wouldn't it be nice if we can combine this maybe with another indicator to kind of help us figure out maybe where the stock might go next, right? So the stock right here, for example, is in the middle of these two key levels. So I don't know exactly maybe where this is going to go from here, but maybe if I add anything else to this, another indicator possibly, I can probably find maybe when, a level is going to be too high, too low, who knows. So we're going to look right now into what's called the relative strength index. It's a super popular indicator. And when we add it here, I want to do this real quick. Let's go ahead and turn off this volume indicator. Just click on the hide button. And then on our RSI, click on the settings button. And then let's go ahead and just turn off the RSI based MA. I think it's a little too much info. And here we go. Now we actually have another indicator that we are going to add to our arsenal. This RSI right here, how it works is, one, you can do it for looking for what's called RSI divergences. And now we won't be able to actually talk about that in this video just yet. But we can go into one of the most main common practices of using the RSI, which is determining when a stock is too high or too low to help maybe determine if there's a trading opportunity. So in this case, there is a level when the price is too high right here. And this mathematically is actually determined whether or not it's above 70 or below 30. So if it's above 70, that actually has a term for it. It's called being overbought. And the reason why they called it overbought is that as buyers step in, buyers are demanding more of the stock and they're going to keep increasing the price of the stock. Sooner or later, it could hit a point when it's overly bought, where if it hits this level, now the stock needs to come down. And if we look in the past and see maybe where that level kind of lines up with, I'm using my crosshair, moving it up. This is exactly the level where we see that price came down, exactly how our indicator told us that the market was probably going to go down from there. And not only that, but it also lines up with our trend line as well. So super cool, right? We have our trend line. We also have our RSI telling us that the market is overbought, that it needs to come down. Now, as the price comes down, that means that people are selling the stock, and sooner or later, they're going to keep selling it and selling and selling it. And maybe it gets overly sold. So that's actually the other term for when it goes under 30, is if it gets oversold. And usually when a stock gets oversold, that is when price tends to bounce. So if we look at when the last time the RSI was oversold, that actually corresponds to being in this area. So if we saw that the stock was oversold, thinking that this stock might bounce, then here we go. We actually ended up getting a bounce because the RSI told us it was going to bounce. So super cool. Not only was it going to bounce because the RSI was there, but because we also had a key level here at 363. So now we have a key level, a support, and we also have an RSI telling us that the market is going to bounce. So cool. When we add multiple indicators together and they tell us the same thing, that's called confluence. So if you can have two or more indicators, typically the more indicators, the better. That usually is a better signal telling us where the market's going to go from there. And another popular indicator, aside from the RSI, is actually this one called the stochastic RSI. Now, the stochastic RSI works exactly the same, except instead of over 70 and under 30, people look here at over 80 or under 20. So this is the overbought levels, and this is the oversold levels. Now, can you tell the difference between, maybe what's the difference between RSI and the stochastic RSI? Cool. If you told yourself, hey, I'm starting to see a lot more signals that are overbought and oversold compared to the RSI, then you would be correct. So typically the RSI, there's less signals. Look, there's 1, 2. There's less signals, but they're usually higher quality. On here, we have 1, 2, 3, 4, let's say 5, 6, 7, 8, 9, 10, 11, 12. We got about 12 indications like when a stock was overbought or oversold. But typically what you'll see is that although you get more signals, they usually tend to be lesser quality. Now, you can either have both of these indicators, they work almost exactly the same, or you can just have one of them and you kind of pick and choose. I used to have both indicators, but now I kind of just stick to one, and that's the stochastic RSI. The reason why is I'd rather actually have more signals telling me something is overly bought, telling me it needs to go down, and I just match that up with other signals. So I can have stochastic RSI giving me 12 signals, and then I also have things hitting key levels, and that's how I usually can kind of figure out some of my best setups, is trying to figure out whether or not a stock is overbought or oversold, and does it line up with any other indicators like maybe a trend line or possibly a key level. So with that being said, try that with all kinds of different stocks. Do with all of the big tech stocks, for example, like your Teslas and Amazons. See if you can see if there's any relation between the stochastic or the RSI, and also like where the stock actually was when it actually hit those levels. For example, here, this is when it was overbought, and then you can see here price went, it was because overbought is telling you the price is going to go down. You can see that price actually went down here on this Amazon stock. So give that a try. Let us know how it goes. And with that being said, see you guys in the next video.